Welcome to the Deep Dive. We're the show that tries to help you cut through that sheer volume of information hitting us every day.
It's a lot, isn't it? Economic shifts, tech news, global politics.
Yeah, it really can feel like a tidal wave of headlines.
Absolutely. And so our mission today is really to dive into that flow, pull out the most important bits of knowledge, maybe some surprising facts, too.
Exactly. Give you that shortcut to being genuinely well-informed.
Yeah.
Maybe connect some dots between things that seem, totally unrelated at first glance.
Right. And for today's deep dive, we're looking at a stack of recent reports. Stuff from CNN Business, Fox Business, CNBC, plus an AP NORC poll.
And it's all fresh, published just August 7th and 8th, 2025. So let's get into it.
Let's do it.
Okay, let's start with something, well, pretty much everyone can relate to. Grocery prices. That feeling in your wallet.
Mm-hmm.
An AP NORC poll just out found that, wow, 53% of Americans see grocery costs as a major stress.
Major. And another third call it a minor stress. So that's most people feeling it.
It really is.
Yeah.
And what's telling is how that anxiety is actually changing how people shop.
Yeah, the poll showed people are buying smaller sizes, using more coupons.
Focusing just on essentials, right? And eating at home more often.
Exactly. Real behavioral shifts. But here's the interesting part, or maybe the frustrating part.
Go on.
Well, even though the rate of grocery inflation has dropped a lot since 2022, it's down to like 2.4% for the year ending in June.
Okay, that sounds better.
The actual prices you pay, they haven't really come down. And some things, eggs, beef, orange juice, their prices have actually sped up.
Sped up? Why?
Mostly supply issues or extreme weather hitting crops. But it also connects to something bigger we need to talk about. Tariffs.
Tariffs. Okay, let's go there. The administration's reciprocal tariff approach. It's bringing in huge amounts of money, right?
Huge is right. Nearly $30 billion just in July.
$30 billion in 1 month.
Yep. That's a 242% jump from last year. And since April, the total collected is $100 billion.
Wow. Okay, so $100 billion. What's the plan? What happens with that cash?
Well, that's the big debate in Washington, isn't it? Two main ideas floating around.
Okay.
One, use it to pay down the national debt, which is, massive. Over $36 trillion now.
Right, that makes sense. What's the other option?
The other is sending out tariff rebate checks directly to Americans.
Rebate checks. Like stimulus checks.
Sort of. Senator Josh Hawley's proposed this American Worker Rebate Act. It suggests at least $600 per adult and dependent child.
So a family of 4 could get $2,400.
Potentially, yeah, with phase-outs for higher incomes, of course.
Okay, that sounds pretty appealing on the surface. Direct cash. But I assume there's a catch.
Well, economists are definitely waving some red flags. Big ones.
Like what?
They're worried these checks could actually make price hikes worse. Fuel inflation.
How so?
Yeah.
More money chasing the same amount of goods.
Exactly. Especially with unemployment so low, currently 4.2%. It risks shortages and could lead to, widespread, lasting inflation. Demand pull inflation. Classic case.
And are businesses already feeling the tariff pinch directly?
Oh, absolutely. Big names like Walmart, Procter & Gamble. They're already warning customers that price hikes are coming because of tariffs.
They're passing the cost on.
They have to eventually. Look at Toyota. They're estimating a $9.5 billion hit to their profits just from tariffs on imported cars. That's unprecedented for them.
$9.5 billion.
Yeah.
Wow.
Yeah, and even Sweetgreen, the salad chain, they cut their outlook again, blaming tariffs for knocking 0.4% off their profit margin.
So businesses that were absorbing the costs maybe can't anymore.
It seems like we're reaching that point for many, yes. The ripple effect is becoming much more visible.
Okay, so from those economic ripples, let's shift gears to the tech world. Things are moving incredibly fast there.
Always. Like warp speed.
Let's start with OpenAI. Their new GPT-5 model is making waves. What's the big deal there?
Well, the headlines are all about it being significantly faster, much more capable.
Better at what, specifically?
OpenAI says it makes ChatGPT way better at writing, at coding. They even use this term vibe coding.
Vibe coding, what's that?
Basically means the AI can generate code that doesn't just work, but it fits the style and structure you want. Like it gets the vibe of the project.
Huh, interesting. What else?
They also claim it's dramatically better with complex health questions. And OpenAI CEO, Sam Altman, he's calling it a significant step towards AGI, artificial general intelligence.
The ultimate goal for many in AI.
Right. He described using it as feeling like talking to an expert. A PhD-level expert.
That's a strong claim.
Well,
They're losing money, aren't they?
Massively. Expected $5 billion loss last year on about $3.7 billion in revenue. But Altman said he's willing to run the loss
Why?
to prioritize growth and investment. It shows this different way of thinking about value in AI. The losses are seen as like capital investment for future dominance.
And they're talking huge valuations.
There's talk of a $500 billion valuation. It's all about capturing that AGI prize, it seems.
Okay, well, OpenAI is making noise. Apple. They seem to be perceived as a bit behind in this AI race.
Yeah, that's the perception. Google even took a shot at them in a Pixel 10 ad, making fun of the delayed Siri upgrade.
Ouch. And meanwhile, you've got NVIDIA and Microsoft hitting $4 trillion market caps, largely thanks to AI.
Right. Now, Tim Cook at Apple says AI is one of the most profound technologies of our lifetime, so they know it's important.
But their focus seems different, more on hardware, making components in the U.S.
Exactly. And that stateside manufacturing focus, while maybe good for supply chains, doesn't directly solve their core AI development challenges. It's a different path.
Could that be a problem long term?
Yeah.
Especially with fewer big tech firms going public early?
It could be. If firms stay private longer, those massive growth opportunities are harder for public investors, like those holding Apple stock, to capture. Apple needs its AI strategy to really kick into high gear.
Okay, moving from the established giants, let's talk Palantir. Wow. Hottest stock on Wall Street.
Yeah, the numbers are kind of mind-blowing, up 600% in a year.
600%.
Yep, reached a $420 billion valuation. That's more than Disney and American Express combined.
Incredible. And they just landed a huge Army contract.
$10 billion from the U.S. Army, yeah?
So for people who aren't familiar, what exactly does Palantir do? It's kind of mysterious.
It is a bit mysterious. They're essentially a data analytics firm. They build software that helps organizations, often governments or large corporations, visualize huge, complex data sets to spot trends and make decisions.
So data crunching on a massive scale.
Exactly, and sometimes controversially. They helped the Trump administration build a database on Americans, faced LAPD scrutiny over racial profiling concerns.
Okay.
They reportedly assisted Israeli Defense Forces strikes in Gaza. But they were also famously involved in tracking Osama bin Laden and, more recently, tracking COVID-19 spread.
Quite a range. Yeah. And the CEO is pretty blunt about it.
Very. Alex Karp has said, quite candidly, their technology is used on occasion to kill people.
Wow.
Yeah. And there are reports of former employees worried the company's moved away from its sort of founding ideals about transparency and privacy. It definitely sparks debate about powerful tech and its uses.
Definitely. Okay, let's switch gears again. Staying with tech, but moving to EVs. Electric vehicles. There was a surprising sales surge recently.
Yeah, really surprising. In July, nearly 130,100 new EVs were sold. That's up over 26% from June.
26% in 1 month.
Yeah, it was the second highest monthly total ever. Plus, a record number of used EVs sold over 36,000.
What's driving that sudden jump?
It seems almost entirely down to one thing, the federal tax credit. The $7,500 credit.
Right, the one that made EVs much more affordable for many.
Exactly. Well, it's set to end on September 30th because of a new bill, so consumers are rushing to buy before it expires.
Deadline effect.
Totally. But the flip side is the fear that EV sales could just collapse in the fourth quarter once that credit is gone. It could really shake up the market.
And Tesla's always in the mix. They just got a permit in Texas for robotaxis.
That's right. Tesla Robotaxi LLC is now licensed to run a ride-hailing service in Texas, initially until August 2026.
And Elon Musk has some ambitious goals there.
Extremely ambitious. He predicted Tesla could be serving half the U.S. population with autonomous ride-hailing by the end of 2025.
Half the U.S. by next year. That seems optimistic.
It does. And while Tesla's making progress, it's important to remember they still lag behind companies like Waymo and Baidu in China in the actual robotaxi deployment game.
Plus, they face challenges, right? Scrutiny over their self-driving tech.
Definitely. Ongoing federal investigations, product liability lawsuits. There have been incidents reported where the robotaxis didn't follow traffic rules, so still significant hurdles to clear for widespread, safe autonomy.
Okay, let's broaden out now. Global affairs, societal shifts, starting with something positive. A peace deal.
Yes, President Trump brokering a deal between Azerbaijan and Armenia. That was significant news.
What's the core of that deal?
It focuses on boosting economic ties between them, and there's talk of potential exclusive U.S. development rights to a key transit corridor in the region.
And the context here is important.
Very. This aims to end a long-running frozen conflict right on Russia's doorstep, so it signals a potential shift in regional power dynamics.
And the leaders involved were receptive.
They both praised Trump publicly and reportedly nominated him for the Nobel Peace Prize. So yeah, seen as a major diplomatic achievement by those involved.
Okay, but in stark contrast to that,
Yeah.
we see ongoing escalating conflict elsewhere, particularly in Gaza.
Yes, the reports indicate Israel is planning to retake Gaza City, which would intensify the war with Hamas significantly.
And this is happening despite huge international and even domestic outcry over the humanitarian situation.
Exactly. Over 61,000 reported killed, hunger surging. It's a devastating crisis. And the U.S. remains the largest arms supplier to Israel through all this.
This kind of situation also really highlights the issue of misinformation, doesn't it?
Absolutely. There was that case with Huda Beauty, the beauty mogul.
Like her TikTok video.
Yeah, spreading various anti-Israel conspiracy theories, pretty wild claims about World War I, World War II, 9/11, October 7th. TikTok removed the video.
And there were business consequences.
Sephora announced they're actively reviewing their partnership with her beauty brand. Shows how quickly misinformation can have real-world fallout, especially in these charged situations.
Shifting to media, there's a new podcast launching targeting a specific audience.
Yes, Katie Miller. She's a former Trump administration aide, also worked for Elon Musk briefly. She's launching the Katie Miller podcast.
And the focus is...
Specifically for conservative mothers, she feels there's a gap in the conservative podcasting world, which she sees as mostly male-dominated.
Interesting niche. Okay, let's wrap up with a couple of, well, eye-catching real estate stories.
Always fascinating to see what's happening at the very high end.
The Obama family's former vacation place on Martha's Vineyard just sold.
Yeah, for $37 million. And the buyer was Les Wexner, the billionaire founder of L Brands.
Lexner. His name has come up in relation to Jeffrey Epstein, right?
Yes, his past ties and business associations have drawn a lot of media scrutiny over the years.
Okay, and another unusual property. Something in Wales.
That's right, Thorn Island. It has a 19th century fort on it. On the market for $4 million.
A fort.
A literal fort. And it's been recently renovated to be totally self-sufficient, renewable energy, the works.
Wow. What does that kind of property tell us?
Well, it's more than just luxury. These unique, often isolated self-sufficient properties might reflect a trend among the super rich investing in tangible assets, offering privacy, unique experiences, maybe even a sense of security in an uncertain world.
Yeah.
A move beyond just stocks and bonds.
So looking back at everything we've covered,
Yeah.
wow, it's a lot.
It really is. From grocery prices and tariffs
To AI like GPT-5 and Palantir, the EV market shifts.
peace deals and ongoing conflicts, misinformation, new media ventures.
And even multi-million-dollar forts. It seems so disparate, but you start to see the connections, don't you?
You absolutely do. These aren't just separate stories. They're all part of this larger, interconnected global narrative,
Yeah.
shaped by economic pressures, tech advances, political shifts.
The threads are definitely there, linking your wallet to Wall Street, to Washington, to Wales even.
Exactly. So maybe the final thought to leave you with, as you navigate your own life,
Yeah.
just consider, how might these really big shifts, we talked about that whole debate over tariff rebates and inflation, the incredible speed of AI development, the dynamics of global deals and conflicts, how might they unexpectedly nudge your own financial choices, maybe your career path, or even just what you buy day to day in ways you hadn't really thought about before?
Something to definitely chew on.